This lecture is going to cover problem 4 in chapter 2, and then I'll also have one that covers problem 5 in chapter 2. So we're going to start out here. Sid Patel bid for and won a concession to rent bicycles in the local park during the summer. During the month of April, Patel completed the following transactions for his bicycle rental business. The first thing we're going to do here is create the journal entries for each one of these transactions. So on April 2nd, began business by placing $14,400 in a business checking account in the name of the company. So I'm going to show you for the first journal entry, it's important that you make sure you put the date, April 2nd, and that money was put in, so it increases our cash, which is a debit. Cash is a debit of $14,400. And in addition, this money came from the owner, so we will increase our owner's capital account, S. Patel Capital, a credit of $14,400. Now, it's important to note that it is required to have an explanation. So as you can see with this explanation, it shows for initial owner investment in Patel Rentals. So that is the first journal entry we're going to make. The second, on April 3rd, we purchased supplies on account for $300. So if we think of what has increased here, our supplies have increased for $300. And when it says it's on account, that means we didn't pay cash for it. It's on account, which means we owe them the money. So as you can see here, April 3rd, supplies, which is an asset, increased by $300. And our accounts payable, which is a liability account, also increased by $300. Remember, a liability has a normal credit balance. Assets have a normal debit balance. So our explanation shows to purchase supplies on account. Next, on April 4th, we purchased 10 bicycles for $5,000, paying $2,400 down and agreeing to pay the rest in 30 days. So if we analyze this transaction, we know our bicycles, which is equipment, will increase by $5,000. We know we paid some cash, so we're decreasing our cash account because we're using it up. So we'll be crediting cash. And since we owe, that will be a liability, or an accounts payable will be increasing. So as you can see here, bicycles were debited for $5,000, which is an asset. Our cash, which is an asset, decreased by $2,400, so we're going to credit that. The normal balance of an asset is a debit balance. When we decrease an asset account, we credit it. And then we'll also have a credit to accounts payable for $2,600. The next, we paid $5,800 in cash for a small shed to store the bicycles and to use for other operations. So we purchased an asset, we debit shed for $5,800, and we used cash to purchase that shed. Cash is also an asset, but we're using it up, so we're decreasing it, which is a credit of $5,800. Then we paid $800 in cash for shipping and installation costs. It tells us that we need to consider this addition to the cost of the shed. It's important to know that anything you pay to place an asset in service is added to that asset. So these shipping costs are going to increase the shed account. So we will increase our asset shed by $800, and we'll credit cash because we're reducing it by $800. Then we hired a part-time assistant to help out on weekends at $14 an hour. Now this gives us information, but this is not an economic event. It only lets us know we hired a part-time assistant. We're not going to do anything with this until we actually need to pay the assistant. So for number 9, you'll show no entry, or April 9th. Then we paid a maintenance person $150 to clean the grounds. So we will need to show that as an expense. As you can see on April 10th, we have debited our maintenance expense for $150. We've credited cash for $150. Maintenance expense is an expense account. The normal balance is a debit balance, which means when we increase this expense, we debit it. The next transaction shows we received $1,940 in cash for rentals. So this is cash is increasing and our income account is increasing. So as you see here, we debit our cash because we're increasing cash, and we will credit our rental revenue for $1,940. Again, remember, revenues increase the owner's capital account, which will be a normal credit balance. Revenues have a normal credit balance. Next, we paid $300 for the supplies purchased on April 3rd. If you look at April 3rd, we've already shown the supplies in the account, but we show we owed money on the account. So if we go back and look at this journal entry, we showed our supplies increasing, but we also showed we had a liability here, a credit to accounts payable for $300. So if we paid that bill, we're going to see here on April 17th, we are going to debit accounts payable for $300, and we're crediting cash for $300. Both of these accounts are going down. The liability account, accounts payable, has a normal credit balance, but when we pay it, we're reducing our accounts payable, which means we'll debit it. We don't owe that money anymore. And we're using cash to pay the accounts payable, so we're decreasing our cash, which means we will credit our cash. Next, it shows we paid a $110 repair bill on a bicycle. Now remember, this repair bill does not provide us with a current benefit. We are just merely fixing the bicycle. So we will treat this as a repair expense for $110, and we'll credit cash also for $110. We billed a company $220 for bicycle rentals for an employee outing. So basically what's happening here is we have revenues coming in. We didn't receive the cash, but we anticipate receiving the cash. So this will be an accounts receivable. As you see here, accounts receivable is an asset account. When we increase an asset account, we debit that account. So we show here accounts receivable will be debited for $220, and our revenue account, rental revenue, will also be increased by $220. Next, we paid the $200 fee for April to the Park District for the right to operate the bicycle concession. So this is an expense for the current period. Concession fee expense accounts have a normal debit balance. We'll debit that for $200, and we'll also credit our cash for $200. Next, we show we received $1,920 in cash for rentals. Again, this is similar to the previous journal entry when we recorded revenues. We debit our cash, and we're going to credit our rental revenue. Next, we paid the assistant $480. So we will show that as a wages expense. It's a current period expense. And we'll credit our cash also for $480. Last, we made a cash withdrawal of $1,000. With the cash withdrawal, it doesn't tell us it's related to a specific activity. This is for the owner. So we will show the withdrawal account has a normal debit balance. Patel withdrawals $1,000 is a debit, and we will credit our cash for $1,000. So we have created all of our necessary journal entries. The next requirement is to set up the following T accounts and post all the journal entries. So what we'll want to do is use your worksheets to show the various accounts, the T accounts. And you're going to post one journal entry at a time. So if we go back to our very first journal entry, which shows a debit to cash for $14,400 and a credit to S. Patel Capital for $14,400. We're going to know the date is April 2nd. So we will debit April 2nd under cash $14,400, and then we will locate the S. Patel Capital account. We'll credit on April 2nd $14,400 for S. Patel. Next, we'll go down the line and continue to do this. The next is a debit to the supplies account for $300 and a credit to accounts payable for $300. So once again, we'll go to our T accounts. We'll go to our supplies T account, show the date of April 3rd, $300, and then we'll also show on April 3rd we credited the accounts payable for $300. Next account or transaction, on April 4th we increased our bicycles by $5,000, which is a debit. We credited cash for $2,400, credited accounts payable for $2,600. So again, we'll go to bicycles, April 4th, $5,000 debit. April 4th for cash is a $2,400 credit. And we also have in the accounts payable T account on April 4th is a $2,600 credit. We'll go back to the next entry and we show a debit to shed, a credit to cash on April 5th. We'll show our debit to the shed, $5,800, a credit to cash on April 5th, $5,800. Next, we also have a debit to shed of $800, a credit to cash for $800. As you see here, April 8th, debit to the shed of $800, credit to cash for $800. Next, we have a maintenance expense of $150 and a credit to cash of $150. We'll go to our maintenance expense. April 10th, a debit for $150, and then up here in cash, we have a credit here for $150. Next, we have cash, a debit of $19.40, rental revenue, a credit of $19.40. You'll see here on April 13th a debit for $19.40, and you'll also see a rental revenue April 13th credit for $19.40. Then we show on April 17th a debit to accounts payable for $300, a credit to cash for $300. April 17th, a debit to accounts payable for $300. Here is a credit to cash for $300. Next, we have a debit to repair expense for $110, a credit to cash for $110. We have our repair expense here on April 18th, a debit of $110, and we have a credit to cash of $110. As we move back, we have a debit to accounts receivable for $220, a credit to rental revenue for $220. So as you see here, a debit on April 23rd to accounts receivable for $220. Our rental revenue has a credit on April 23rd of $220. Next, we have concession fee expense of $200 and a credit to cash for $200. You see April 25th, a debit, concession fee expense $200 into that T account, and a credit to cash on April 25th for $200. On April 27th, we have a debit to cash of $19.20 and a credit to rental revenue for $19.20. Here we see April 27th, $19.20 debit, and we also see April 27th, $19.20 credit. Then wages expense, debit of $480, credit cash of $480. We have wages expense April 29th, a debit of $480, and we also show the credit here under cash of $480. Then the last one, Patel withdrawals, debit $1,000, credit cash $1,000 on April 30th. You see here April 30th, S. Patel withdrawals is a debit, and then we have the same April 30th for cash is a credit. We've now posted all of the transactions to the T accounts. Our job now is to total them and create a balance. As you can see with the cash balance, we total our debits and we total our credits, and the difference will be our cash balance of $7,020. The cash, which is an asset, has a normal debit balance. Our accounts receivable has a balance of $220, supplies of $300. Our shed has a balance of $6,600, which makes up the $5,800 plus the $800 journal entries. Bicycles of $5,000. Our accounts payable, we're going to total our debit column, total our credit column, and you see our balance is a credit balance of $2,600. Remember, accounts payable is a liability and the normal balance is a credit balance. Patel Capital is a credit of $14,400. The withdrawals is a debit of $1,000. The rent revenue, we total that with a total balance of $4,080. And then our various expenses, wages expense of $480, maintenance expense of $150, repair expense of $110, and concession fee expense of $200. Now it asks us to prepare a trial balance. So what we're basically going to do is take all of this information on the T accounts and we're going to create a report showing the trial balance. Remember, the trial balance is in a specific order. We start with our assets, the most liquid first, then we go to our liabilities, our owner's equity, our revenues, and then our expenses. So as you see here, this shows the Patel Rentals trial balance, and we list all the accounts. We have our assets, the cash, accounts receivable, the supplies in the shed, and bicycles first. They will all have debit balances. Then we'll take our liability next, which is accounts payable, and we have a $2,600 credit balance. The S. Patel Capital is a credit balance, and the S. Patel Withdrawals would be a debit balance. After that, we show our revenue, which we only have one revenue account. Rental revenue has a normal credit balance, and then all of our expense accounts are listed with normal debit balances. So as you can see here, we've listed the normal balance of each account, and from there we total them. They must have the same total, because remember, whatever we debit, we need to credit something. So our debits need to equal our credits of $21,080.